Hello and welcome to the Assay. Today I am happy to be joined by Chris Berry, President of House Mountain Partners, and we're here at 1-to-1 Mining Investment New York. So Chris, thanks for joining me here today.
Thanks for having me. It's great to be back.
Always great to have you on board. I know you've been doing work with us for quite a few years now.
Long time.
Yeah. But for those who might not know, maybe we could just start with a quick introduction into kind of your work and also kind of how you work within the battery metals
Sure.
space.
So I've always been interested with this macro question of what happens when commodities, technology, and geopolitics collide, and trying to think through the investment implications of that collision. And so about 15 years ago, I left a career I had here in New York on Wall Street with the intention of building a research and advisory platform to address that question for investors and for companies. And so 15 years later, here we are, and I really work with two groups. Number one is companies themselves along the battery supply chain, could be mining companies, refiners, could be battery technology companies, helping them think through issues of corporate strategy, balance sheet optimization, kind of what's going on in the financial markets and how do they need to position and adjust. And then the other group that I work with is, of course, investors. Could be hedge funds, private equity, sovereign wealth, high net worth. Again, thinking through issues of where along the battery supply chain do we want to play? And of course, if you're a private equity fund and you have a long-term time horizon, that means one thing in terms of where to position and where to play. And if you're a hedge fund and you're just worried about the next 3 or 6 months, it's a totally different conversation. So it's been pretty rewarding in that respect, being able to sort of talk to two entirely different groups of people and kind of bring them together. And also have some board level experience as well, and I've done a lot of work with battery recycling. So, you know, I like to say I'm always increasing my surface area along this ever-dynamic or ever-changing dynamic space.
Absolutely. And so, you know, I thought we could just start by looking at kind of the key supply-demand outlook for, the battery metals, critical minerals. Where do you see some of the biggest shortfalls, and is there any solutions coming up to kind of address that?
The solutions are, more capital going into the ground. I think it's an interesting question because, you can't just sort of say you can't answer the question, what are the supply-demand dynamics for battery metals? Because, of course, you could have a conversation about lithium, about copper, about nickel, about rare earths, and they're all somewhat different in terms of supply and demand dynamics. Obviously, market size and pricing, and which is generally opaque. It's just very, very different depending upon the metal in question. And so, look, to cut right to the chase, I think everyone's very excited, as I am, about copper these days. It's one of the few battery metals that hasn't seen huge price downdrafts, like, for example, as we have with lithium. So copper is something that's very interesting to me because regardless of whether or not you're talking about batteries or EVs or the grid, it really is one of the single essential metals, period. Lithium, again, we could go through each one. We could be here all day doing that. So just to highlight a couple,
yeah.
Lithium at $8,500 per ton, lithium carbonate today is completely out of whack relative to what this industry needs in terms of an incentive price and the capital that it needs to grow. We were on the panel earlier this morning, and I had said that, lithium demand is growing at about 20% per year, okay? And supply basically needs to double between now and 2030 in order to have things roughly equalized. And so, look, it's an opaque, specialized commodity. We've never seen supply and demand balance. There's either been oversupply like we have right now or undersupply like we saw in recent years. And so the issue I'm trying to get at is the current price for lithium is as unrealistic as the all-time high price we saw in 2022 of $85,000 a ton. So you really need to see $20,000 to $22,000 lithium, I would argue, to start seeing capacity come back here in the United States. So we're ways off from that, but perhaps that's the opportunity. In general, though, if you go down the supply chain and we talk about supply and demand and what needs to happen, you do need to see much more cathode manufacturing capacity, anode manufacturing capacity, electrolyte, separators, and of course recycling capacity. That all needs to be built domestically, okay? And we can argue about the ultimate size, but it's a chicken and the egg problem, and I think it always has been when you talk about developing supply chains. What is the point? What is the wisdom in building recycling capacity or cathode capacity if you don't have a lock on the raw materials, a lock on the lithium or the copper or the cobalt? So that's sort of what the market is wrestling with right now. The prices for a lot of the metals are down and do not incentivize building that capacity, and instead everyone's really focused on mid and downstream, but they don't really add up right now, and so that's going to have to change.
Absolutely. And I mean, President Trump has been bringing a significant amount of focus into kind of the domestic critical minerals value chain. So from one end to the next of this value chain. So do you see this helping, hindering kind of the development domestically and globally, I suppose?
I think the awareness, the executive orders are helpful. I think the tariffs, the threat of export controls are not helpful. But I would say, just to back up 1 second, I think that the Biden administration continued sort of what Trump had started with respect to Trump was really the individual, or his administration, the first Trump administration, started the trade war, right? Biden continued it, but I would also argue that the Biden administration really tried to help build domestic aspects of the supply chain through the Investment Infrastructure and Jobs Act, and of course the IRA. The Republicans in the House with the big beautiful bill seem intent on wiping that away, for lack of a better phrase, through different tricks. So, I think that the Trump awareness with respect to executive orders and trying to expedite permitting is helpful. But again, we were talking about this earlier today. You really have some headwinds right now. You have higher real interest rates in the economy, which has increased the cost of capital to get these projects built. Metals prices, as we just alluded to, are all over the map. And then the policy uncertainty. So I would argue that of those three, if you think about, okay, I'm a company, I'm trying to build capacity here in the United States, which one can I control, or which one can I try and sort of work with? And so if there were a situation where there were not even long-term but medium-term certainty around tariff levels or export control levels, you would start to see much more capital come into the United States or North America and get this capacity built. But without that, it's really challenging right now. So that's all I would sort of say about what the Trump administration has done thus far. These executive orders are terrific, again, because they create awareness of what we need to do, but dismantling some of the critical parts of the IRA, potentially dismantling it. We'll see what happens with the Senate when they take on the bill. It just slows things down, and we're not in a position where we can slow things down.
Absolutely. I mean, has there been any change, that's come out of some of these new acts that Trump has brought in terms of kind of growing domestic supply?
Not really, to be honest with you. I mean, people could sort of nitpick that, maybe point to this bill or that bill, but right now, uncertainty reigns. I don't want to call it the dismantling of the Inflation Reduction Act, but putting it into or bringing about, I should say, a high degree of uncertainty with respect to, if I'm a battery manufacturer or a cathode manufacturer, even a mining company here in the United States, and I'm not sure if I'm going to be able to access investment or production tax credits 1 or 2 or 3 years out, these are very large capital investment decisions that these companies need to make. And unless they know for sure that the tax credits are going to be in place or production credits are going to be in place for the next 2 or 3 or 4 years or 5 years, they're just not going to make the investment. And so it's going to slow everything down. So, without getting too political, you could make an argument that one of the unintended consequences of the Trump administration and the tariff sort of regime is ceding leadership to countries like China, which is exactly who we're trying to compete with. And so, obviously, his administration or representatives from his administration and Chinese representatives are meeting in London today as we speak to talk about export controls and try and figure out a way to get this Geneva Agreement back on track. Who knows what we'll see, whether or not it will be definitive tariff levels or export controls, but you have to have certainty with respect to the permits and the tariffs, and the export controls before any investment dollars can be put in the ground.
Absolutely. And I mean, so as you mentioned, kind of the IRA is not fully being dismantled, but it's really fallen by the wayside. And I mean, last year, every conversation that we had at our events were focused on the IRA, the energy transition, and that discourse has completely shifted now, as we mentioned earlier, towards kind of that defense discourse.
Sure.
Yeah. So, how do we bring a focus back into the energy transition, EV uptake, all of that?
Well, I think there is still the focus on the energy transition. It's just not here. It's not here in the United States. The investment narrative, under Biden perhaps was electrification and the greening of the economy and 50% EV penetration, whatever the numbers were. Now it's national defense, right? Now it's very different and it's very direct, and we're going to do this alone, and we're going to dictate the rules of the game. And I don't think that our Chinese competitors in many ways are going to be willing to accept that. So, it's hard to know specifically how this will all shake out. I would argue that the whole discourse around deglobalization and decoupling is not going to happen, simply because it can't, right? You can't have a relationship like we have with the Chinese, where you've got $500 billion in trade every year just split and not expect to have some pretty significant ramifications. So, and back to your question, the transition is still happening. It's just not necessarily the same level of focus here in the United States. The only other thing I would say is, as we think about national defense, yes, it's critical, obviously, right? But if you're relying on the Department of Defense or the U.S. government to be a buyer of last resort, or think that I'm going to be able to build mining capacity here in the United States and the government's going to take everything, that is misplaced. I mean, the U.S. government's demand for certain rare earths is actually quite small, tiny, relative to the overall commercial demand. And so, how do we get these projects built? Regardless of the narrative, it's going to take, again, a mixture of public and private capital.
So what are some of the implications of this kind of do this alone type of mentality that not only the U.S., but a lot of countries are kind of splintering their critical minerals value chains? What are some of the implications that we might see?
Well, I think it's probably going to put pressure on pricing for some of the critical raw materials. Again, I'll just go back to what I had mentioned before. What is the sense in building a magnet operation or a PCAM operation if you don't have access to the raw materials? And so, I guess you could make the argument that as things splinter, the focus on vertical integration is going to become much more important. But again, I would be cautious of investing in mid to downstream applications, again, refineries, magnet manufacturing, unless you had some sort of a lock on the raw materials. And again, that comes back to accessing the lithium and the copper. And the funny thing, Amy, is none of these raw materials, none of these metals are rare, right? I mean, we could get a shovel and go to Central Park here in New York and start digging, and we would find, you probably wouldn't be able to find a mine, but you would be able to find access. You find these raw materials. I mean, you could get lithium out of seawater, right? If you really wanted to. Wouldn't recommend it, but it could be done. And so it's not so much finding the raw materials, it's building that processing capacity, but you have to be able to have the raw material to be paired with the processing capacity to be able to move forward, regardless of the metal.
And that processing capacity has been moved to other
countries.
It's in
China.
Yeah.
It's all in China. I mean, again, think of it. We could spend a lot of time we could look at the copper supply chain. We could look at nickel, rare earths, graphite. I mean, it's not so much the Chinese dominate the mining, but they dominate that midstream piece where we take the raw materials that maybe they've been beneficiated and then turn them into battery grade or magnet grade materials. And so today, everything still for the most part goes through China. And this is something that we can tackle here in the United States. We are tackling it. It's just not something that's going to be solved in, say, one or maybe even two presidential election cycles. And so, we don't lack the capital in this country. We don't lack the IP. Like, we know how to separate rare earths. We know how to, build lithium batteries. We just lack the political will, and that's always been in short supply. And so we'll see if the Trump administration, with control of both houses of Congress, can push something through and start to shift this tide to get it done. But again, this is not something that's going to be solved, again, in a year or two. It's going to take, at least a decade.
Okay. And so just to kind of wrap it up, what's your key focus going to be in the next couple of years?
Well, look, I'm still optimistic about the need to decarbonize, the need to electrify. It's happening, regardless of the rhetoric out of Washington. And so we can either invest in the entire supply chain or we can get left behind. It's very simple. I've always had two basic sort of fundamental investment ways of thinking. Number one is security of supply matters more than anything else. And number two is you better own the robots or the robots are going to own you. And what I mean by that, that's not some AI thing. basically what it means is you can control metals prices. They're going to go up, they're going to go down, economics are going to change, but are there technologies out there, are there innovations that allow for, for example, hedging against metals prices, or new and interesting ways to extract lithium or build batteries or things like that? And so over the next couple of years, I would be very focused on some of those technologies as hedges against a lot of this metals price and policy uncertainty.
Okay, sounds great. Well, Chris, that was all the questions that I had for you today, so thanks
Great.
for joining us.
Thank you.